Good afternoon, everybody. Hello and welcome to Paul's Monday Market Update number 162 for Monday, 11th of November, 2024. I hope you're all well. Hope you enjoyed the weekend. Hope you are ready for an interesting week ahead in the markets. For those of you just joining us out on the live session, if you could just confirm that you can hear my voice and see my slides, that would be great. If you're joining us for the first time, okay, the sort of Monday market update is just that. It is me racing through as much as I can fit in the next 30 minutes, looking at strength and weakness within FX and indices markets, looking at a few charts of interest, and then looking at the live market. It's not a signal service, it's not trade recommendations. I'm just sharing with you what I'm looking at and why I'm interested, and you might wish to add that to your own watch list for the week ahead. Thank you, guys. Thank you, much appreciated. As always, you're very welcome here. Right, just remember that you are always responsible for your own trading decisions. Some of you may not be aware that we also have a trading podcast, the Togs Trading Podcast, okay, which you can find on pretty much all of the sort of kind of podcast apps these days. But we also have our own website now, Togs Pod, which basically uploads uploads the podcast in both video and audio forms, and it also has access to Ian's trader blog and also the recording of this Monday Market Update. You can find that at togspod.com or just look at the QR code there. Just take a snapshot of that if you wish to join us. And as always, if you want a little bit more extra, a little bit more insight and education, well, then what we have is that basically every Monday, London, 2 o'clock, okay, I do a webinar for active trades. Monday Market Matters. You can register on the website or through that QR code there you can see. Today's session, the educational element will be about the post-US election results. Basically now what for traders as the world and his wife starts to become sort of more accustomed to to seeing more of Mr. Trump, and most importantly, really, how does that affect us as traders? More of which later on in today's session. Okay, let's cut to the chase. Okay, so if you're new to trading or new to joining us, this might maybe look a little bit overwhelming or intimidating. It's not. It's easy to understand. These are just some of the data that comes out of my own weekend model. Okay, in terms of doing my own analysis on the STAM, I'm always looking for where's the strength and where's the weakness within FX markets primarily. Because that is what allows me to allocate my time, energy, and resources more effectively throughout the week. So, what is all this telling us, and how do we use it? So, let's just bring up the old drawing tool here and stuff, and we'll crack into it. Okay, so. Here we are. We're into week 46 of the year for the 11th of November. Where's the strength and where's the weakness? Well, sterling remains, top of the pile, but you've heard it. You've heard me say it for the last few months that a lot of that is just more to do with the weakness of others more so than inherent strength in the UK. We also have dollar, okay, is holding on to second place. And we're going to look at more of that today. We're going to revisit some of the sort of Trump trade ideas we talked about a month or so ago when I kind of floated the idea that the markets were implying that Mr. Trump is going to win. And, as I try and sort of get the message across to new traders, but to everybody really, that if you're not really sure what the score is, always follow the money. That's normally a pretty good indicator. But as you can see, dollar still remains in the top two. Wouldn't surprise me if it went much stronger. Okay, this week as well as basically the kind of aftermath of the US election results start to sort of filter its way into the markets. Yes, I know we already saw some kind of reaction, and we'll look at that in a moment. But my view is that what we'll have probably found is that lots of banks and funds will have had their analysts in over the weekend, basically just trying to come up with a plan for what the score is, and then we'll start to see that start to play out over markets. Okay, over the next few days, weeks, and months in the run up to his inauguration. So dollar remains strong, and at the bottom of the pile, Kiwi remains weak, and as does Japanese yen. And I would probably be looking at, I think, dollar yen might be, it has been an interesting trade, but might become an even more interesting trade as we see dollar strength, yen weakness, okay, continue there, right? So we look at we look at that. We can see that one of the big losers of Trump's victory was euro. Remember, we had been noticing that it had just been nudging its way up over the last couple of weeks, but you can see basically in the aftermath, okay, it just basically got sold off, and we will look at euro itself. And we can see in terms of since the markets opened, kind of last night for us in the UK, but first thing in sort of the Pacific session, we can see that basically, the majority, okay, the majority have sold off. The majority of the majors have sold off against the dollar. Not a massive shocker, that really, is it? When we look at the sort of indices, okay, what we can see is that Nasdaq, okay, and Russell, and those two in particular, certainly the Russell, they responded very favourably to the results there. FTSE is, in a tactical sell program. That's not that shouldn't really be a shocker, okay? After what we've talked about, after the budget, etc. We can see oil has now gone strategic short, okay? I think that's going to be an interesting one. Okay, I've got you could make views for both sides of it. Maybe we'll look at that in a moment. Silver, interestingly, has gone tactically short as well, and Bitcoin is all about the buys, okay? And we'll talk about that, okay, a little bit more when we look at some of the charts of interest. But so, as I said, not massive changes in terms of the STAM, okay, maybe just a few sort of clearing up their position. But as I said, I think we will start to see a shift over the next week or two as people start to position themselves accordingly in the run up to his inauguration. Okay, so says that. Let's have a little look at some charts of interest. Okay, so charts of interest. We looked at a few of these about a month or so ago. I talked about doing we did the Trump trade, and talking about how that was starting to flourish, and that was insight into the way markets thought the result was going to run. I didn't do a piece on the Harris trade, so you can read into that what you will or what you want. Okay, but we talked about it because what we saw was, kind of October time. If you look at this is DGT. This is Trump Media and Technology Group, DGT, okay, on the weekly chart. And you can see that, from when Harris had originally stepped in, basically you can see that was what was the impact we were seeing on the share price of DGT. It was fascinating insight to read that Harris's campaign was spending $5 million a day more than Trump in terms of advertisement and stuff and what have you. And you're advertising, marketing, etc. You're getting Beyonce to turn up and stuff and say hello at an event and stuff. That doesn't come cheap, etc. But you can see they were spending that, but really sort of mid-September, end of September, start of October, we reversed, and kind of we you can see from being lows at $12.50, we traded as high as 55, okay, but then we actually sort of came off quite a bit. I think what we're going to see is kind of, you can see in the pre-market, we're already looking, what's that, $34, we're up from 30, okay. I think what we saw was probably a bit of people throwing their sort of toys out of the pram, okay, and basically just selling DGT in the aftermath. But I suspect that what we'll see is we will see probably a continued sort of a drift higher in DGT. That shouldn't really be a particular shock and stuff, So that's maybe not picture's not as particularly pretty as like, but yeah, I'd say $30 is the new base and stuff. We look to drift ourselves higher. One of the big winners, of course, is Bitcoin against the US dollar on the weekly chart. We had, we talk about it, regularly, frequently and stuff. And we talked about how we had been in, just excuse my drawing, but hopefully you can see, we'd been kind of in like in a broadening sort of flag there, as you can see. But Bitcoin was reflective of the two positions, as in Harris was kind of, well, you could say anti-Bitcoin compared to Trump being pro-Bitcoin and actually pro sort of increasing its use and exposure. And as you can see, that having tipped out here, okay, at the start of September around about $55,000. We closed last week above $80,000. We're here trading just under 82,000. Okay, that's quite some move. You can see that how that basically that move panned out. And we talked about it. I talked about how only this candle. This was the only candle that had closed above 70,000 a week. Every time else, we had basically we had effectively rejected it. I was looking at it just going into the election there, but as soon as Trump won, bang! You can see for yourself that's what's going. That's the direction. Okay, and of course, undoubtedly, all of the crypto bros will be absolutely well happy about that, won't they? And stuff. So it's that. The other one is Tesla. Okay, we looked at this, and we looked at Tesla, a few weeks ago, and I was talking about how I was concerned. Musk really did, Musk really nailed he nailed his colours to the mast, and I was very clear about who he was supporting. Okay, in every way, and thankfully, for him, he was on the winning side. And we can see, how that has basically played out there. Okay, can't you? That's the weekly chart of Tesla. From basically, I said I expressed concerns. Okay, that were Harris to win, that Tesla share price would undoubtedly drop because they would go after him. But the fact that he's on the winning team, you can see for yourself there. Okay, from trading down at towards $240, all right, 240 now. Basically, last week closing, what's that? $321. You can see actually even in the pre-market for today, all right, up 342. $20 in the pre-market. Most stocks would love to have that kind of action up $20 in the pre-market. Okay, and so that's a reflection of what happens when you back the winning side, isn't it? You can see it there very clearly, etc. So yeah, well done, Mr. Musk. I'm still not going to buy one of your cars, though. That's the story. But each their own. All right, each their own. But what I said, I wanted to just revisit some of these Trump trade ideas, see how they've played out. Okay, from when we spoke about them, sort of, I think it was about 4 to 6 weeks ago. And you can see for yourselves that that's worked out well, and we'll have a little look at the currencies as well, but that are relevant to that as well. So yeah, so that's I think that's all the charts of interest to put in for today. So let us switch across to the live market and see what's been going on there. Okay, so just bear with me a moment, and we'll switch across. Okay, so I'm hoping that you can still hear me. I'm hoping you can see charts here. This is just one of my profiles with the indices for our sessions. So we've got Dow here, we've got Nasdaq, SP 500, Russell, FTSE, Nikkei, DAX, and oil. So yeah, maybe we'll look at quickly. Let's start with oil and then go on to the indices. Just clear these down. Right, oil. Okay, oil. Let's have a look on the weekly chart. So, we talked about a couple of weeks ago. This is the weekly chart of our West Texas. And I talked about how I thought we were coiling up in oil. Okay, there was a level of support there around about $68, and you can see that we were getting supported beneath and effectively resistance above, and price was coiling up. And as I said, I think the initial thing would be a lowering of the price of oil. That would be my view. The reason being that I think he will make sure the Middle East is sorted out one way or t'other. Okay, removing that from the equation. Okay, and that will have a bearish impact on oil prices. Whereas the kind of Biden-Harris team were very much all about renewables. All right, Trump is the opposite. Okay, he's going to drill, he's going to frack, he's going to make America being, energy independent again, and with that, the option to basically sell surplus, etc. So all of that will, add to supply. Okay, which is likely to drop oil prices. The thing is, though, is that interestingly, that if Mr. Trump, carries out his promises, that could be okay. And we will find out very quickly. That could be good for the overall global markets, which means that would help with demand for oil. Okay, as global economies do better out of it. So my view would be short-term bearish, long-term bullish on oil. That's the way I would be looking at there. But at the moment, I see that that's drifting back to $68, isn't it? All right, let's have a look at the indices. Well, you can see the score, can't you? These are on the daily charts. Okay, Bosh, you can see what the score is. You can see how markets reacted to that victory there. Okay, that's pretty clear, pretty obvious. As I said, I was kind of intrigued because Russell, in particular, really slammed his way. There we go. If we go to the weekly charts, there, you can see that we crashed through the highs of the year, the all-time highs, etc. for Russell, and you can see how that has carried on. Right, that has carried on bullish again, even today in electronic contracts. Okay, before the market opens, that's what we've seen there. And I wouldn't have cause to doubt that to continue in that trend, certainly for the immediate future. So we've seen that across Russell, and as I said, you can see the store across the rest of them. Okay, even SP 500, big bellwether. You can see for yourself, Bash, real big bullish engulfing candle. Now, normally, when I see a bullish engulfing candle at the end of an uptrend, that normally makes me very nervous. Okay, I want to see a bullish, I want to see a bullish engulfing candle, down here at the end of a pullback. That's where I really want to see it. But when I see it at the end of an uptrend, I'm normally a bit worried that it's the final fools of the market. But of course, this is a political event, okay, that is might well change the way we all see markets, both in the US and globally. And I would, as I said, I wouldn't bet against that at the moment. You can see that basically that kind of honeymoon period will continue. And I would see that continue. Interestingly, DAX is up this morning, all right, which when you consider, last week we printed, what is effectively like an inside bar bearish pin bar. Of course, I don't know if I mentioned it last week. You're talking about the kind of the impending doom within the German parliamentary system, and then we saw that basically occur over the last few days. Okay, but it has absolutely no impact on the DAX. Certainly no negative impact, really. And it just probably shows that how DAX is more, DAX is just more aligned with global indexes than implications in for German, for the local German domestic market, and it kind of it's working its way back up to these recent highs. If you look at this on the daily chart, look at how the daily 50 has held, even with the big bearish kind of engulfing candle there. The 50 is held, doesn't it? And it's kind of now back up above the 20 as well. That is, it's defying gravity. One that is not defying gravity is, of course, FTSE. We talked about this for the last few months about how nothing was going to happen until after the budget, and then we'd see how the markets reacted to that. Well, you can see for the last 2 weeks how markets have reacted to that. I would say not particularly well. And so, we have been bearish that way. Okay, you can see on the daily chart, on that daily chart there, to me, that is, the 50 is acting as resistance. We get squeezed there. At the moment, the 200 was acting as support, but we're here, and it would not surprise me if we had a little bit of a bounce up to this level of support, and then basically create another lower high, move down towards 8,000. That would be my kind of view at the moment. Now, of course, Mr. Biden wasn't the biggest fan of the UK. Mr. Trump, despite the best efforts of Mr. Starmer and his team, actually, his mother was Scottish. He's very pro UK. He'll be interested in doing a trade deal, and that will be interesting to see what and if and how that unfolds over the next few weeks and months. Okay, and whether that is what bails out the FTSE, because personally, I don't see anything there happening. Okay, to basically give the FTSE a big bump. The UK budget was all about taxing people more. They called it growth, but it's nonsense. Anybody could see what the real score was and stuff, and those taxes, okay, just will land on the private sector, and very that will have a drag and have an impact and stuff. So, I would be still bearish for FTSE, and I'd look at seeing how there are like tactical options, all right, to take that trade in line with that over this week. Okay, so there was that. Then we had let's have a little look at gold. So you might remember last week I talked about how we had basically printed that's a bearish pin bar. One swallow doesn't make a sum. A sum. One pin bar doesn't mean an end of a trend. But I did point out that we had similar price action across most instruments, especially most dollar instruments, and not surprisingly, gold is like that. And what we have seen there, okay, is of course is a drift lower in gold. Now, once again, this is just you might say that this is part of the Trump trade as well in terms of people will be a little bit more positive, all right, positive about the options for us, okay, as in terms of the global market, people might be just feeling a little bit more optimistic, okay, and so invariably, people will be taking profit on that great gold run. And it would not surprise me if we drifted our way back towards this kind of 2600 area. That's what I'd be looking at, and then I'd be looking to see how does it react with the 20 period moving average. It's been well away from it for most of the year, and I'd be interested to see is there enough support to bounce it, or does it basically crack and then head to the 50? That's what my view on gold would be. And as I said, silver's already gone into like that sort of tactical. It's S2S tactical short, and you can see it's probably leading the way in terms of gold. We peaked a week earlier, and we're kind of, as you can see, we are drifting back down, and it would not surprise me for us to get back towards that kind of 30 area. Right, that would be the on silver. That's what I'll be looking at. Here we are around the daily 50. I'll be interesting to see does that flip? Right, do we get a 50 flip and it becoming, and we work our way down to 30 in terms of like as a tactical short. So that's what I'll be looking at on on silver. We've already looked at Bitcoin, haven't we? So look, why don't we switch across to the dollar? All right, let's have a look at the dollar and what the score is going on there. So yeah, what we can have a look at is, we'll have a look at dollar, but we'll also have a look at, in terms of continuing that Trump trade, we'll have a little look at dollar Mexi in a moment. So, all right, let's have a look. Start as always with the dollar index weekly chart here. Those of you joined us, we talked about how we found support at 100, and we really hollowed our way there for the last couple of months. If we look at last week, last week's candle, okay, it once again, remember I was saying it is a bullish candle. It's engulfing the previous candle. Okay, there's quite a lot of wicks there. We've taken out a lot of the stops on both sides of the market, but ultimately it was a bullish close there. Okay, and you can see already this week. Okay, we're up, and it would not surprise me for us to get towards that kind of 106 area that has been the highs of the year so far. That would be me being pro dollar, and as I said, I think that will flow its way through to the STAM as well in terms of what the way we see that. If you look at the kind of the 4 hour chart for the start, we're pushing on. Okay, there is dollar strength. That continues. If I look at dollar against Japanese yen, once again last week, interestingly, it's I wouldn't be wanting to call it an engulfing candle, but the truth is, it traded higher and lower than the previous week's candle. It's clearing out orders there. If anything, you might look at that and see that as a bit of a bearish pin bar, even though it was a bullish close. But go down to the daily, even to 4 hour chart, you can see the 4 hour chart. You can see, the kind of shifts we saw. But once again, I think maybe there's a little bit of a dollar yen strength. Okay, and that's what I'd be looking for as a trade into the start of the week. That's what I'd be looking at, long dollar yen. That's where my view would go. I think have I got it on here. Let's have a quick look at what I've got here. This is dollar against offshore Chinese yuan. So this is the weekly chart. You can see what was happening when basically Harris entered the race. Basically weakened the dollar, strengthened the yuan, and then same time, like a couple of the equities that we looked at. Okay, there was a reversal there. Okay, end of September. And you can see that basically, there's been dollar strength, okay, yuan weakness. Last week, you can see for yourself, that's continued, and it's continued this week so far as well. Just another reflection of, dollar against Chinese yuan. I don't trade dollar against Chinese yuan. I'm sure maybe some of you I don't, but I do watch it because invariably, you've got the one and two economies in their all-out trade war, even though it's undeclared, and seeing how that particularly plays and stuff. But it was interesting that seven acted as a support, all right, and you can see for yourself we're back up above the 50 there. Another reflection on the Trump trade was, let's see if I've got it up here, dollar Mexico. All right. So we talked about this, about This is the weekly chart here, okay, and you can see, we kind of bottomed out back in March, and and it has actually been a work already, and this was before the US election, because of course there was the Mexican elections as well, I think. Now, please correct me if I'm wrong, or I don't in any way claim to have a good grasp of Mexican politics, but my understanding is the new president, the female, is very much a kind of socialist, and that in itself was having an impact in terms of weakening the peso against the dollar. And then, of course, Mr. Trump winning has been that, as we said a few weeks ago, we were just pivoting around $20. You can see they're pivoting around $20. But now, if you look at those last couple of weeks, all right, we're closing above 20, all right. And once again, that is an uptrend. Why would you fight that? Okay. I consider that just to continue until somebody says something to the difference. And let's face it, it's Mr. Trump. He may well do. But I would be looking at that as that is just another reflection of that kind of dollar strength across the board. We're going to look at euro dollar in a moment anyway, right? But you can see the score, all right? Okay, dollar strength across the podium against the Swiss franc there, right? That's what we're expecting. That's what we're seeing. So yeah, as I said, one of the big losers from that was the euro. And if we look at here, euro, you can see for yourself there, that's the euro daily. We had already been getting sold off, and then we had a little bit of a little bit of a pre-election sort of rally, where there's people positioning out dollar, just trimming their positions. But you can see for yourself, warmth. All right, there we go. Euros there at we're trading at 106, and if I go up and the lows of the year, what's that been? Lows of the year there about just kind of lows of the year being what's that 106. Yeah, but I think we're trading at 106. What's that? 106.53. Yeah, it would not surprise me for us to at least test that and actually even go lower. It might even surprise me if we went to last year's lows. What's that? 104.47. Okay. I think that's the way we'll go. America, whether you love them or loathe them, America will be a little bit rejuvenated, all right, and they've also got the clarity of what's going on there. Whereas in Europe, there's riots, unrest in Spain over the weekend. Germany is a basket case at the moment. We all talk about it. You all read it and see it, and has the uncertainty of what will be ultimately new elections. Okay, in a few months' time, right, and that will have huge, and maybe that will change things. Strange enough, I don't think it will. But you can see that all of that has an impact on the euro. And as I said, the euro is the big loser from those American elections. If we just look here, all right, well, euro sterling we'll look at in a moment, but euro Aussie, all right, has gone euro CAD, which has been weak. Okay, euro against Kiwi, all right, euro Swiss is kind of fighting itself. No surprise there. But euro yen, even again, yen. Remember, yen is at yen, and even remember yen and Kiwi dollar are at the bottom of the STAM, but you can see for themselves they're strengthening against the euro. The euro is weak, and that's a reflection there. Okay, so I expect to see euro sort of drop into the bottom part of the STAM, all right, into the weakest part of the STAM over the next couple of weeks. That's what would be my own particular view. All right, and let's quickly finish with sterling. Just last minute, so just finish with sterling as always. All right, okay, sterling's it. Let's start with cable. I was a bit surprised that I thought we would continue weakness, and you can see, look at that those last couple of weeks. That's I would look at those as high wave candles, a bit of indecision. I was surprised. I was very surprised that actually if we look at the election, how we dropped. We actually did rally our way back up to 130. It was almost like kissing it goodbye. And now where are we trading there this morning? 128.80, 120 pips down. All right, from the from sort of Thursday onwards and stuff, and that's been quite some, as you can see, quite some move down there, right? And that is, as I said, I can see dollar going to the top of the STAM, right? And also, well, I've said it for a few weeks, sterling continues to sort of lower its way down. Interestingly, even like pound against yen, remember, has been the top pile. We printed a bearish inside bar pin bar. Yep, this week we've started off a little bit bullish, probably a little bit of risk on, all right, sentiment, but I'd be interested to see, does it have what it takes to keep up? This is the 4-hour chart. Okay, look at that. It's just trapped between the 20 and the 50 at the moment. It needs to happen for it to break out of there. remember I was talking about pound Swiss, how I thought it was coiling up, okay, and it was kind of literally I was looking at, is it kind of a risk on, risk off, trade in terms of the pound against the Swiss, and what you can see is actually, not pretty, but it is breaking its way out, and that's an implication that there is risk on there. People will buy sterling, all right, and basically selling the Swiss franc, all right, so taking their profits properly in terms of the front of the trunk, um, running the front trunk trade. And then basically, I think 115 starts to become the magnets that we sort of drag ourselves towards. Euro sterling. Remember, we talked about how Bosch, we'd come down to 83 and we'd have a bit of a bounce, all right, not, not a hugely strong candle in the sense that, it closed beneath 84, but the body of it compared to the last couple of weeks was bullish, but you can see for yourself last week, bang, that is a case of, this is giving sterling strength because of euro weakness. That's what I said right at the start. That's what we're seeing there. Okay, you can see if you go down to the daily chart, you can see basically, from last week as the election result coming in, you can just see euros getting sold off. We had the election result coming in at the same time as basically the German government was imploding and stuff. Okay, and you can see you can see what the score is there. We had got above the daily 50 and then inside bar bearish, even though it's supposed that's a bearish inside bar pin bar, you can see coiling up and then boom, it just dropped its way down there. Okay, and that is just that reflecting. So, as I said, I think we see dollar go to the top of the stand and euro start to weaken its way, at down into the bottom of the stand there. All right, let's draw it to a close there. Okay. As always, I appreciate I'm racing through trying to cover as much as I possibly can in half an hour. I hope you found that useful. I hope that's given you a little bit of insight. Just a reminder that there will be no Monday market update next week because I'm traveling to London. I'm speaking at the Finance Magnet show. If any of you are there, by all means, come across and say hello. I'll be there on the Tuesday. So there will be there'll be no Monday market update next week, but have yourself a fabulous week. There's going to be some interesting setups, I suspect. Trade well, manage risk, and have a great week. And I will speak to you soon. Take care, everybody. Cheers. Thanks, everybody. Thanks very much.